Welcome to the Whitwam Wealth Real Estate Podcast. Today's episode, Do This Now.
Welcome to the Whitwam Wealth Real Estate Podcast with Scott Whitwam, your blueprint to financial abundance. Settle in as we explore the mindset and methods for wealth building through real estate.
Welcome back. I'm Scott Whitwam, and today we'll be talking about Do This Now. We're going to be talking about some things that we should take action for, and some things that I'm hoping that our government will actually do now. Also, if you've been in the market here lately, you've seen a dramatic change since the first of the year. Just the optimism, what I would call consumer confidence that is in the marketplace is on the rise. I think things are changing in a very positive way for us as real estate investors, and it is time for us to do some things as real estate investors before we get caught behind the wave. You know, there's a couple different places you can be on a wave when you're surfing. You can be way out in front of the wave, which generally ends in a crash. You get out in front of things, you get out over the wave, and you go off and the wave crashes on you. We don't want to be there. Or you can be behind the wave. And typically when you're behind the wave, you have lost or given up the best part of the wave. You still may surf into shore, but it won't be as exciting or as exhilarating, or in our case, as profitable. Or you can be right in the middle of the wave. You can get right into the tube. You can really, get your surf on and have an enjoyable, fantastic surf back to the shore, which is what we want. That's where profitability is. We want to be where we want to be, and things are ramping up for us. I think that the end of last year was kind of the end of I would say some really tough markets. I mean, we still did pretty good, but it was the end of some really tough markets. We saw the first of this year, and probably each month has seen a little bit more confidence come back into the marketplaces. Interest rates still aren't where we want them to be, because we need consumers to be more aggressive at purchasing our flips. Obviously, we need investors to be more excited about picking up our wholesale properties. And I would really like to see some more pressure on the rental market, people moving out of their parents' basements and putting some more pressure on the rental market so that it would strengthen investor returns on the buy and hold side even a little bit more, and make it a little bit less vacancy periods in our marketplace. So what I'm saying is it's time to do this now. It's time to get your ducks in a row. Make sure that if you're just getting into real estate investing, that you start to develop your relationships with your investor sources. Now, if you've got boatloads of money and you don't need investor sources, you've already got this thing cured. But for a lot of investors, even guys who've been doing this a long time, a lot of our investor sources have changed over the last 2 years. Guys who were in the business 2 years ago, they're either not in the business now, or they have changed their products. They become way more conservative because they have faced a couple years of real rough waters. And so develop those relationships. Make sure your investor sources, whether it's hard money, whether it's private investors, whether it's family or angel investors, make sure those things are in place, and start looking for the great deals that are available in the marketplace. At times like this, generally what you're going to have is changing of tides. I grew up, close to the ocean, to the Pacific Ocean, and we would see that when the tides would change, it would be kind of change, the currents and make it very, choppy. And so we're kind of in that place now where the market has been down long enough that sellers' expectations have been tamed a bit, which means that when we go in and we share with sellers reasonable expectations, we show them, what their property is worth, what it's going to take to get the property into selling condition, how much it's going to cost for us to close on these things, that we can negotiate some better deals and better opportunities. It's also time to do this. make sure everybody is aware, everybody in your sphere of influence is aware that you're buying properties now. And get the word out and start finding some of these properties that may have been held back on the market. So, for instance, people transitioning into retirement communities, people getting rid of second homes, people tired of being real estate investors with tenants. And a lot of these properties now, we're in that kind of changing of the tides. There's going to be some people who are cutting out of these properties that they've held on to. And you want to be the guy who is ready to pick those up, especially before the big hedge funds get their momentum going again. One of the things that we faced, as good as the market was in 2021 and 2022, is big corporate investors were creating some headwinds for the average investor. And so we want to try to get in front of that and get our networks, our spheres of influence producing for us, and then our marketing campaigns, the things that we do for marketing. And I mean, marketing of all types. When I started, I remember doing yellow signs, going out and banging them in the ground myself. Then I hired people to do it for me. There's opportunities in there. If you're at scale, maybe it's time to start looking at doing some more, Google paid ads in order to try to open up some of these markets for you. Maybe postcards, direct mailers, yellow letters. There's all these different marketing time. It's time to do this now to start to open up these opportunities that have been hidden for the last few years, so that we can get in a place where we can start to position ourselves to acquire properties. We've had some very good success since the first of the year at finding some of these opportunities and these deals, and being able to scale it such that we can, turn things that weren't turning good profits back into being profitability. The other thing I said a little bit about, the government needs to do this now. I think it's really time that the government does this now, and that is replace the Fed. I think the Federal Reserve wields too much power, and I think the Federal Reserve is greatly to blame for the problems, the real estate problems that we had under the previous presidential administration. The Fed and the Treasury Secretary kept talking about things like transient inflation and that these numbers aren't real and we're doing all this stuff and it's going to be good. Well, the Fed artificially kept interest rates low for a much longer period of time than they should have. And then by the time they figured out that they had miscalculated, that they had misjudged, that they completely blew their prediction model, they then raised interest rates almost 2,000% over a period of a very short window, basically slamming the brakes on an entire industry, whether it was construction, whether it was real estate, retail sales, whether it was the wholesale markets. It created a lot of havoc for a lot of our investor lenders, because now investors had properties that they had purchased when interest rates were good. By the time they got these things rehabbed, now they don't have anybody to sell them to at a price that they need to make a profit. And so, properties that our hard money guys had to take back increased significantly. And so they had to change their and restructure how they manage their deals. But I think that if we went back, remember, this is the way it used to be, decades ago. We went back to a market condition driven interest rate. I think interest rates would have a tendency then to float with the economy, that they would come lower into the marketplace because there'd be more competition for the business, for the money, in order to, obviously sell their money into the retail markets. And it would get rid of one institution determining what is good or bad. I mean, we even saw this last year when Jerome Powell and the Fed made their decision right before the election to start cutting interest rates. So instead of taking a metered approach to the process, almost as if they were trying to correct an entire industry in order to make the party in power look good they cut a half point on the bank-to-bank interest rates when the economy was not where they said it needed to be to do so. And then on top of that, they went and cut rates again. So what happened? The bank-to-bank rates dropped, but did you see credit card rates come down? Nope. Did you see auto loan rates come down? Nope. Did you see mortgage rates come down? No. In fact, as you saw, just the opposite. What you had is you had this bump in the bond market that dropped down for a short period of time in anticipation that the Fed actually knew what they were doing. We saw buyers come back in the marketplace. And then what we saw is the bond markets realized that the Fed had missed it again. And they had overcorrected. And the bond markets then for the next 5-6 months went up. And as the bond market yields went up, so did interest rates. And coming into the first of this year, interest rates were as high as they had been in years. But now we're starting to see with some changes, and we've talked about those on some previous podcasts, we've seen some changes that are starting to bring the bond market back a little bit in line with towards Treasury rates. Not significantly. I mean, we haven't seen a big drop like we'd like, but I think as we see more of the policies that the White House is talking about implementing, I think we're going to start to see more and more pullback on these interest rates. But I think a good thing to do would be change the power that the Fed has, because when you get somebody in who doesn't understand or consistently has missed economic indicators, it has an adverse reaction throughout all of our financial lives, which affects us as investors. And that's why I'm saying it's time to do this now. It's time to get ready, because I think we're in the mix of that turbulent waters. I don't think Jerome Powell is long for the Treasury. He has said he's not stepping down. I think that once we see the tax bills get done in the House and the Senate, get their spending, appropriations met, I think you're going to start seeing a change, a little bit more focus on not only changing the Fed, but hopefully, as has been kind of a pattern of the new administration, of another elimination of a part of bureaucracy that has not served, I think, this country very well, and I think could be run better through Treasury and through a more open market system. So again, I think it's time that we look at the big picture as an investors and see that now is the time to get moving. I guess one of the things that has kind of disturbed me, make me want to talk a little bit about this, is I've talked to a few investors who are still sitting on the sideline. I mean, they've got projects going, but they're still sitting on the sideline, waiting and kind of hoping. And I just know from coaching students over an extended period of time that generally they're the ones that will begin complaining when they're riding on the backside of the wave. And so I think it's now time, in order to start ramping up, in order to get us back in the marketplace. Because I think there's buyers out there. In fact, as I know there's buyers, because our real estate brokerage activity, which is on the retail side of things, is up. The amount of showing requests, the amount of listings that we've taken, the amount of buyers, the amount of new contracts, all of it is up since the first of the year compared to the previous 24 months. And I think that is very good news for us, and not just geographically where we operate here in the Phoenix area, but I'm getting the same kind of reports from other agents that we deal with, and seeing the data in other states, that I think that this tide is starting to roll. This is the spring season, and I think you're going to see kind of an extended spring this year, especially if those interest rates in the bond market continue to come down. I think it's going to play very well for real estate investors. And that's why I wanted to encourage you that it's time to do this now. It's time to get back in the game. It's time to stop sitting on the sidelines. It's time to get things in order and get ready, because I think that there is a window of opportunity that is going to hit. and there's going to be huge buyer demand. In many markets, inventory has already come up, though I just saw the national, numbers not too long ago that said that we did have a little bit of pullback in February. January numbers were up, but the numbers are up overall nationwide for new listings, which means now there's more opportunities. So we get interest rates a little bit down. We're going to have a surge of buyer intensity because there are a lot of buyers that have been sitting on the sidelines waiting for just this thing, a little bit of a break in interest rates. And I don't know about you, but I want to be the guy with the properties they're looking for. I want to have the assets available in order to take advantage of the coming rush before it hits a fevered pitch. Because once it hits a fevered pitch, then it gets more competitive to try to acquire our distressed properties. And then if you are a real estate agent, you know how much harder it is when you're working with a buyer when sellers are receiving 4 and 5 offers and inventory goes away. So again, I think it's time to do this and do it now, and get our businesses going. I want to thank you for joining me on this episode of the Whitwam Wealth Real Estate Podcast. I invite you to subscribe today and be part of our growing community. Be sure to leave us a review, and if you have any questions, I'd love to hear from you. You can always find the Whitwam Wealth Real Estate Podcast on Apple Podcasts, Spotify, iHeart Podcasts, YouTube, or wherever you enjoy listening to your podcast. This is Scott Whitwam. Be sure to join me on the next episode of the Whitwam Wealth Real Estate Podcast, where we're wealth building through real estate.